such an amazing event the last few days. It's been incredible so far, and I'm really happy to be here, especially to be joined by such an esteemed panel, and I'll ask them to introduce themselves in a minute. And today we're going to be talking about hotel investment in different capacities from all over the world. We have a lot of experience on this stage. And hopefully near the end there'll be a few minutes for some questions from the audience. So please keep that in mind. I believe mics can be passed around if there are any questions. So to kick off, I'd like to ask the panelists to introduce yourselves, please.
Testing. Am I on? Yes? No?
Yeah?
Yes. Okay. Thank you. Lourie Kruger, CFO at Katara Hospitality. Been in the region for almost 20 years, mostly within the hospitality investment space. And yeah, so a lot of familiar faces around.
Thank you, Lourie. And you?
Hi, my name is... Hello? Yeah. Hi, my name is Adeeb Ahamed. I'm the Managing Director for 2014 Holdings. We are an asset management company spread across Middle East, Europe, and India.
Thank you. David?
Hello, my name is David Damiba, Managing Partner and Co-CEO of Kasada Capital Management. We're a hospitality-focused platform with a wonderful backing of our strategic partner, Accor, and also the Qatar Investment Authority. We're focused specifically on Africa, from South Africa all the way to North Africa now.
Wonderful. Good morning. Schönen guten Morgen. I'm representing your investment real estate. My name is Andreas Löcher. I'm heading up the acquisitions and sales team for hotels and retail.
Great. Thank you guys for being here. So I'm going to start a bit more broadly, and I'll pass this one to you, Lourie, seeing as you're right here. What are you seeing within our industry when it comes to investment today? And how has the global economic landscape in the last few years, which has been fairly challenging, inflationary environment, high interest rates, how has that impacted investor confidence in our space?
Yeah, I think, look, the highlight at the moment is obviously the easing of the monetary cycle. So we're seeing some rate cuts coming through. Long may they last, but you know, it's uncertain just how long and how deep they'll go. But I think even with the initial move, it's bringing a lot of relief to investors in our space, right? A lot of hotels have been under immense pressure from a coverage point of view. The banks have kind of been barely held at bay because there's a lot of distress on the banking books right now. So I think, you know, immediately relief coming through that. I think in the slightly longer term, we didn't see the banks foreclose as much as we normally do in these cycles, right? Which means that they're all sitting on assets that are underperforming. They're holding a lot more capital. So, you know, the people who do have debt is in the lucky position, and you know, maybe they're under pressure, but the banks haven't been able to lend to some of the other people that were shut out of the market, right? So in the medium term, initially, relief for everybody, and I think in the medium term, we're going to see a lot more liquidity coming through in the space, which is, it's all positive right now.
And Adeeb, what are you seeing? Is this different from past economic cycles in your view?
Well, yes, you know, because COVID was something that was not there before, you know. Past economic cycle was primarily on the economic aspect where you had a major crisis that was followed by the level of increase in interest rates. But this time, we have seen an abnormal increase in interest rates for a very short period of time, and which stood for the longest period of time. And as my fellow panelists said, the first cut seems to be a relief for everybody, but for a larger community on deal making in the hospitality sector, I think still not enough. We would be looking at least till another 6 months where we would expect to see another 3 more cuts coming through, where you would find a lot more people interested to start making a lot more transaction. As we all know that 2023 saw one of the worst in terms of hospitality deal making worldwide, you know. And I think so the first 6 or 2 quarters of 2024 seems to have an uptick with the confidence that most of the central banks are dropping down on the interest rates, especially on matured markets like US and Europe. UK, another aspect, you know, it's a threefold problem that is being looked upon from the European market as such. You know, one is of course the inflation, second is the high cost of funding, and the third is the labor issue that you see in the market? Predominantly finding good labor in the market is becoming a big challenge.
Thank you. And David, from an African perspective, I mean, we can't paint the continent with one brush, so what do you see? What are you seeing there?
Yeah, I think the main difference with what we're seeing in Africa is obviously the markets in developed markets in the US and Europe were a lot more active in terms of secondary market and leveraging transactions. So the shift in the yield curve has impacted them in quite a big amount. The existence of the secondary market in Africa was already not necessarily that large. It was fairly an illiquid market. The move in the yield curve, albeit huge for developed markets, is not on a relative basis, wasn't as crazy in terms of movement in terms of Africa. So we've been the most active in terms of transaction in the secondary market in Africa. It is impacting us, obviously, because you have this almost awkward conundrum where you have post-COVID hotel operations actually doing well and catching up. So operationally, very valuable assets that are getting better. But then from a capital structure perspective, you have the conundrum where the ability to acquire these assets is becoming almost impossible, where you have an inversion where the cost of debt is actually going above the cost of equity, right? So you have an odd conundrum. So the question now, your position as is, okay, we're probably at the top end of the cycle. You need to have a long-term view, right? And the long-term view might imply that you look at acquisition in a different way, where you commit more equity or maybe 100% of equity, with a view of using leverage down the road as the yield curve comes back down. So again, being a professional investor in that environment is fairly interesting because there's a lot of moving parts, and especially in Africa, you're dealing at different markets and currencies. So, but we remain bullish long term, and the more one has access to capital in this period of time, the more advantageous it will become in the next cycle.
Thank you. And Andreas, from a European perspective, from a landlord position that you're in, what are you guys seeing?
Yes, I'm majorly commenting on Europe as we're majorly active in the hospitality sector here. So we were having a long-term going upwards the last 10 to 12 years until COVID. So we've been growing tremendously at low interest rates. Interest rates, we said, lower for longer. That was the quorum for the interest rate situation. Having said this, with COVID and then later on with the rise of interest rate, this came to an abrupt stop. Nonetheless, I would say in comparison to other asset classes, hospitality now is back intact. But there is a certain disconnect between capital markets on one side and hospitality, which is working quite well again, even though we are at the moment in our countries more struggling with the rise of costs, which is currently the limiting factor maybe to realize better results. And then also, because of this disconnect, the transaction markets has really coming down tremendously. There are hardly any transactions in the hospitality sector in the recent 12 months in Europe. This is now about to change, and we all are looking forward to interest rate cuts, further interest rate cuts to be seen pretty soon in our markets.
Thank you. And in light of the geopolitical uncertainties that we face today, are investors approaching hospitality assets more favorably, would you say?
Good question. Depends on where you are, I suppose. I mean, the geopolitical risk, whilst it's topical right now, it's just another risk. So ultimately, when you're looking at an underwriting, how much stress can you put on that underwriting, and how many risks can you cater for? We deal in a business where we sell a perishable product, right? If you can't sell tonight's bed today, you can't sell yesterday's bed, tomorrow. So again, so what does that mean? When risk hits, whether it's geopolitical or anything else, hospitality takes within the subsectors of real estate takes the hit first, right? But we also then recover, right? Because we are such a short-term based turnaround business. So yes, I think it's geopolitics clearly back, and it's going to going to remain back. I think we were in a bit of a honeymoon phase for a few years. But yeah, it's going to vary by market and how much visibility we have in these.
And Adeeb, are there specific regions attracting more capital or specific regions investing more in hospitality due to some of these geopolitical issues in your view?
Yeah, I think so. As long as you remain an international investor with a larger, broader market base, to a certain extent, you will be able to mitigate the risk, whether it is through inflation, through high interest cost. Of course, mature market seems to be yielding lesser and lesser as years pass by. We find that even though the risk is higher on emerging markets, taking bets on emerging markets, of course, India being one of those, seem to be of a high potential interest to asset owners such as ourselves, where we find that the market takes longer to get a project up and running, but the return seems to be higher as and when you start rolling the ball. So I think so, yes. Considering the geopolitical issues that is happening around the world, we try to mitigate that by investing in other areas that has a longer term return on investment.
Okay, thank you. And I mean, we all know how badly COVID hit our industry, and luckily that's passed. But I'd like to understand from you how you think the pandemic reshaped the way we assess deals. Has the way we forecasted changed? Should we be looking at things differently? I don't know if David, if you want to take that.
The impact on the pandemic on our view of the world going forward, yeah.
I think so, yeah.
I think, it's, as an investor, having done the investing game for now almost 30 years, I come to kind of appreciate in somewhat difficult ways where crisis, shock to the system, make you learn quite a lot. So statistically, effectively, those 3 standard deviation moves, those shock to the system, end up becoming events that you study and you see how you come out of it. If you look at the 2008 crisis, same thing. Late 90s internet bubble, same thing. So I think looking at COVID, especially from our industry standpoint, we really looked at that 1 3 standard deviation event that we can kind of learn from that. And then what it, I think, shows is a tremendous amount of resiliency embedded in the system, right? So I think that's what everybody can see, how resilient things are and how human nature, by its very basic concept of vacationing and doing business is there. So I think we learned a lot from that, and you can always we already looking at our analysis and doing a pre-COVID, post-COVID kind of world, right? What was it pre-COVID and post-COVID? But I think learning from that is also understanding from a risk perspective, what are the characteristics of the profile of the hotel that can show a higher level of resilience under the shock system. So for us, it's especially in markets like emerging markets and frontier markets, risk and perception of risk and understanding of risk is is really in the eye of the beholder. Where am I getting on that is that local clients and guests of local hotels have a very different perspective of their own country, their own market. So any hotel that has ton of that exposure tends to have a very good defensive position in terms of shock. And you can see a lot of differences across segment and the different hotels we might have around the continent. So finding and building a portfolio with this amount of defensive positioning that kind of relies more on that local network of guests kind of creates kind of the portfolio diversification that's needed. So that's one of the things that kind of came out, and we still kind of learning from it when looking at different models, et cetera. So it's almost philosophical in a way, but I think that's one of the key things we can learn from the system, and as investors to assess risk a bit better.
No, interesting. Please, yeah.
So COVID, to whatever it has done, I think so for an asset owner such as ourselves, it has really given us the reassurance that this is the sector to be invested in for a very long time. I think the way that the resurgence of travel happened after COVID, and when you look at the profile of the millenniums and the Gen Z, and the interest of their spending pattern by the latest survey done by McKinsey, would clearly understand that they are expecting to spend around 29% of their total income in terms of travel and experiences. So I think so it is for what COVID has done on a negative side. The positive side is that to many asset investors, it has really given up a strong reason to stay invested in the sector.
Yeah, absolutely. I think from a global perspective, tourism and travel is a hugely resilient industry to be in.
Maybe,
so we're all lucky in this room, I guess.
Maybe to add on COVID, I think this was also a real stress test for our industry, and we really have passed this positive way. You know, tourism and the movement of people came back much quicker than everybody expected. We all thought, you know, it'll be like in three years away, but no. You know, once people could travel, and really people love to travel, you know, they were back just immediately. And I think it was more the limiting factor of air liquidity that not all, you know, all flights were on. So this took a while and was maybe one of the limited factors, but not the interest and the intention of travel itself. So this is something which definitely is positive, and it tells everybody that the industry is intact. And maybe one word about one trend which emerged, it's now going back a bit, is the remote working. This also has somewhat enhanced traveling, maybe more of a short-term window. So this is something which came and will probably stay to a certain extent also in the mid to long run.
Thank you. So keeping this all in mind, when we forecast a deal and we underwrite a deal for 10 years, are we going to be putting in geopolitical issues? Are we going to be putting in pandemics? What do you guys think about that?
Yes, you have to stress test this, right? And whether you're stress testing, I think the risk angle in hospitality has become much more sophisticated. And to David's point, that goes around how do I segment where my demand comes from, right? If I could build it, right, how would I build it, and then go and find an asset? That goes to how flexible is my labor, right? So they're very clear lessons learned, but then you take those same lessons, and when you do an underwriting, you're looking forward, especially in emerging markets, a 10-year underwriting is quite a bullish thing to do. But you have to stress test these things, and it's no longer just, I'm going to take 15% off my cash on cash and see what happens, right? Or I'm going to hit my EBITDA in year 5. You're going to have to run multiple scenarios, and again, seeing where you can use the lessons that you learned out of COVID and potentially mitigate these.
And out of curiosity, are any of you using any technology or AI to help you with forecasting?
We're doing some work on that. I think there's going to be, I think there is a lot of demand for this right now. From what we've seen, the large language models can be used to help. It's trying to use what is out there today and then build something that is going to make that applicable to our business, right? Because right now, there are a lot of forecasting tools, all utilizing the same technology. We haven't quite found anything that's robust enough for us to use, but we're doing some work in that space.
Interesting. Anyone else using AI?
Yeah, I think from a pure risk perspective, underwriting it's very difficult to underwrite disaster, right? So why is that? Is that when you underwrite downside on a single event, you can do that, but the one thing that finance doesn't like is a correlated event, an event that occurs in every single asset that you own. So the difficulty around that is that you have a shock to the system where portfolio diversification doesn't help, which is the 1 in 100 years crisis. So the best way to say is just how can you survive something like that? And probably I would say flexibility around your leverage, discussion around the banks is probably, can you live to fight another day, having more equity around that. But in terms of frontier markets like us, investing in markets like in Africa, we do underwrite to what we would call to effectively to foreign exchange devaluation and foreign exchange shock, right? Which is something that thankfully you don't have to deal with too much when you're in Europe, but in frontier markets we do have to do that. So that's the key point on the risk basis. And then on AI, I think AI will. On this side, I spend a lot of time understanding AI and trying to find it. I think it will be helping. It will be helping us as investment firms. It will help us. I think it will help us most likely around. I have a core belief that the kind of the fundamental analysis that we do can be done with AI. But one thing that AI will be difficult to harness and do is the human mind's ability to project the future under different conditions. That's very, very difficult, but it's because it is a multidisciplinary approach that hopefully will be the key thing the human brain can maintain and be separate from that. So I think our ability to analyze data and get faster and making those decisions, but the view on the world going on the future probably will remain for investors. Otherwise, there'll be no more investing even in the stock market, right? So you'll have to be able to kind of, just maybe venture capital will have to do the same, but it will be helpful. It'll make us more efficient and ideally better investors.
Especially to see past patterns and to see what's going to be going on in the future, for sure. Okay, so I'm going to turn a bit to more consumer and operational trends. Are there significant shifts in traveler behavior that are influencing how investors assess short-term and long-term growth opportunity in our space? I don't know, Andreas, if you want to take that?
Yeah, yes, I would think so. You know, people tend to, in Europe, often tend to stay on one side shorter because of what I've mentioned for staycation. But then, you know, when you talk about business, they may then on the other side, going for conference, go there and stay for longer. So this also is a positive signal also for long-term residents like products. So this is definitely also a trend. What we can see in Europe is that the experience element is something which is of highest importance. You know, the common areas are really the place which is getting a bigger focus, less than the rooms. So in Europe, often the rooms are getting smaller. They're still very nice and well designed, but the common areas to hang around in the common areas and work there and collaborate there. So this is a trend to do this in a very nice and a very trendy environment. So that's probably what you can see overall in Europe at the moment.
Okay. And David, from with your focus in Africa, are you changing gears at all to focus more on this experiential type of travel and or staying in urban locations? Are you guys changing gears?
There's a couple points. I think what was just mentioned. I think we're obviously also very bullish on lifestyle brands and lifestyle in general. We just acquired a lifestyle asset in Johannesburg last month that we were really excited about, and we're very excited about partnering with, and we're doing more of that across Africa because it represents the culture and the growth of that market. We're definitely also seeing a trend that we're testing within our markets which is effectively really integrating co-working within our hotels in Africa as well. We think the early days in that expansion within our hotels, but it's actually looking pretty good. It's something our guests are looking forward when they come into our hotels for business, etc. So the integration of co-working as a seamless entity within that is great. And then from a pure experiential in Africa on the resort side, I think we're starting to nibble a bit more at the resort side across the African continent. We've been focused more on business hotel. I think it goes without saying there's incredible destinations, and we need to probably market that a bit more. As the minister from Morocco was mentioning this morning, there's so many destinations on the continent that we can kind of keep driving, and for us, it gives us, again, from a pure investment perspective, even more diversification, right, in terms of exposure to different segments in different countries.
Thank you. And are any of these traveler trends maybe going in the wrong direction for us as hoteliers? You know, change in business travel, company restrictions on travel, end of the revenge travel, I think, which is what Andreas was referring to, cost of living. Is there anything that we need to be thinking about, or that's making you think about different hospitality asset classes? I think David just mentioned co-working, but what about, service departments? Anything different? Are you guys thinking outside the traditional hotel space?
Again, I think it goes back to how do you potentially look at diversification within a project or on a platform, right? And again, the short-dated nature of selling, nightly accommodation. Why wouldn't you, if you have the opportunity, to put some, longer-dated rentals with service departments in there, or longer length of stay type products where you're targeting a very niche part of the market. So yeah, absolutely. I think there's a case to be made. I think in Europe, business travel has been quite slow to come back, and some places worse than others, and that's affected the middle market most. But I suspect that might offer some opportunity in the medium term as well, right?
And Adeeb, are you looking at different geographic locations or any other types of asset classes within the hospitality real estate space because of some of these
I
trends?
think a certain sector that has seen a strong growth over the last couple of years is the luxury segment. Luxury segment in the hospitality overall space. And I think so we've seen a 6% growth overall in different markets that we have invested upon. And I think so this is an area that we had earlier not focused so much upon. Mostly on the business hotels is where we had invested. I think so the growth of business travel towards the pre-pandemic level would be very slow to catch up. And I think so that's the sector that we are now looking towards investing more on the luxury side. And also we're looking at hotel apartments. In Indian market, it seems to be a growing trend to have these kind of properties, especially on the connect segment and the religious tourism segment as well, you know. So these are the two areas that we are looking at from an investment perspective.
Okay, thank you. And Andreas, from a landlord position, I mean, in some of the locations you're in Europe, some of the markets, there's been some huge inflationary costs that have come into the industry. So, you know, some of these are superseding some of the ADR increases that we're seeing. So from a sort of lease perspective, do you think there'll be some changes in the hotel space?
Yeah, very, very good question. So indeed, there has been a rise in costs, tremendous costs, particular personnel. It was also, you know, because our crises in Europe, which are taking place temporarily, the energy price costs, which have been risen a lot, this came down luckily a bit, but still, you know, with the overall heavy costs, this really, you know, indeed eats very often away the strong ADR increases which we have been seeing overall in European markets. Having said this, I think it depends really on the concept which you're looking at. So economy hotels, therefore, are en vogue still, again, where the cost structure is relatively low, where you can, from scratch, achieve higher GOP margins. It may be in Europe a bit more tricky in the mid-market, 3.5, 4-star segment, and in the luxury segment again, it's again maybe easier because you will be able to increase ADR in a more rapid way, which then may better cover also the tremendous increases in costs. Yeah.
Thank you. So we've been talking about ESG for a number of years now, and it's a hugely important part of our industry, which was only really catalyzed by the pandemic. Where are you guys today with your ESG position, and does it influence your investment decisions?
Absolutely. I think we've got a number of assets in Europe where obviously, you know, ESG, the European market's been at the front end of ESG regulation for a number of years now. You know, it's a game changer, especially if you holding you know, relatively old buildings in the luxury end of the spectrum. To bring these buildings up to the standards that you need is expensive, right? But the alternative is you get locked out of the capital markets because the banks will need you to be able to certify your green credentials. And then in the worst case, what we have seen in the luxury space, in Europe specifically, are already we're seeing stranded assets, right? Where investors will not look at these kind of assets because the cost to bring them up to standard is just so high that the underwritings don't make sense. So you know, I think we've been so far relatively unscathed in the Middle East, emerging markets in general. Although, you know, a lot of people are doing a lot of good work. I know Kasada's done a lot of work around their ESG strategy and policies, and there are other players that are trying to get ahead of the curve. And yeah, I think if you're not working on it today, maybe you should, right?
Okay, understood. David, do you want to talk a little bit about what Kasada's doing?
Yeah, I think it's you can't go around it, right? So you have to look at it from 3 points. As a global citizen, is it important? Yes. As an investor focusing on Africa, which is a continent with so many young people, etc., and influencing that population and those communities, from a pure civic standpoint, that's something you want to be doing. And then as an investor, if you don't do the right thing from an ESG perspective, and as a real estate investor, your buildings will be worth nothing down the road. So all these three, this is one of those things where the heart connects with the brain, and in terms of what needs to be done, it's very, very important. So as Kasada, being given the fact that we've been given the ability to deploy quite a bit of capital on the continent of Africa, we take it very seriously and making it also one of our foundational tenets to really kind of lead the charge there, invest heavily and push it. Partnership with the World Bank around EDGE and our buildings, focusing on food waste management with a partnership with Winnow, doing a lot with in terms of education. My partner Olivier Granet spends a lot of time around developing a concept of education, which you are very familiar with your organization. So I think we can really make such a massive impact across all these things together. And yeah, so we're both excited about it, but it's also a question of remaining relevant for future-proofing what we're doing in Africa, going long-term as we build a platform. So it's fundamental, and we're doing a lot, and we should be doing even more, and we're going to continue pushing for it.
Great. So looking to the future, why is the hospitality industry such an attractive asset class, despite some of the challenges that we've just discussed? Adeeb, do you want to take that one?
Well, the way we look at it, it's an opportunity for any business to express and connect to the local community that you are investing inside. It's a bit more philosophical in that manner. On an economic perspective, is more because as time progresses out, a lot more people are looking to get experiences in their life. Travel will become one of the most important aspect in everybody's saving pattern because they save to spend on an experience. And I think so, having said that, that's the reason why we are there. It's a human connect. No AR, no AI would actually take up that experience of physically being there. So it's very important that if a story needs to be told, if boundaries needs to vanish, people needs to travel. And only if they travel will they be able to, understand the importance of humanity as one single place rather than being split through geographies and boundaries.
Nicely said. I think I'll end it on that and ask the audience if there are any questions that you guys might have. I don't see you very well, but does anyone have any questions for the panel? No? Ah, okay, well then.
There we go.
You're off the hook. No, well anyway, when you look at the next 5 to 10 years, where are the biggest opportunities from an investment perspective going to be then?
I think the mid-market's going to come back. I think it's so unloved right now, especially in Europe, that I think there's probably going to be some tactical opportunities there in the not too distant future. Yeah, I think from a product point of view, that's where I'll focus. And then I think being able to pick up some accretive yield out of the emerging markets and combining that with developed market portfolios, we're starting to see people asking questions around these things, and I think that's going to gain some momentum.
Okay, and would you say the mid-market in the emerging markets as well? Or?
I think mid-market in Europe first and foremost.
Okay.
Yeah.
Okay. Adeeb, what about you?
Two sectors. The first tier would be China and India. India more than China on a long-term perspective. Why? Because India is heavily undersupplied when it comes to hotel rooms. Even for the domestic market input that we have seen in the recent years, where the growth of domestic tourism has been largely growing with double-digit numbers, we are not able to see the number of rooms in the market grow to that scale. Number two, very positive about the Middle East growth story, especially with the single visa, tourism visa that is coming up as of next year. It's an opportunity for multiple property owners to see how they could connect their properties where they could put it together and have it sold, because somebody who's coming here would spend 2 to 3 days, then would want to go into Saudi, want to go into Qatar, So, there's a large opportunity of increasing our investment horizon to not just to UAE, but also to Saudi, to other parts, Oman, playing a very important aspect when it comes to tourism as such. So so these two markets would be a core focus for us.
Excellent, thank you. And David, I think we wish there would be a single tourist visa for Africa.
Yeah, I think within our world in Africa, I think we're from a supply perspective going from a low base. There's a lot of growth ahead, and I would probably highlight one area where we haven't spent too much capital in, and the opportunity is probably enormous. Is actually, if you were to look at the different segment, the economy sector, the economy segment in hospitality is probably underserved in Africa, playing this massive kind of regional, local demand in a way that if one can solve that by deploying hotels in a very economical way, could be an enormous transaction on a secular basis for the next 15 years. So that's probably one area I would say where capital can go and can be quite transformative.
Excellent. 10 seconds, Andreas, because we're
10 seconds. I would think there is, a lot of potential global travel. If you're looking at China, for instance, the growing middle class, so there will be new demand for hotel product anywhere in the world because people would like to travel, and I think traveling is good. Traveling is also better. Is good also to understand different cultures. It helps our world also to get a more peaceful world. So therefore, we have with our industry certain contribution in that field.
Great. What a nice way to end. So thank you so much to the panel. You can join me to thank you.